Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about two of my more risky plays. So whenever I'm trading a small account, typically what I like to do is I like to have a kind of a way that I manage this, and you can learn about this at www.fivestartrader.com, FIVE. This is my newsletter. Um, so during the last episode, I wrote about small account tips and tricks, how to multiply a small account. And basically what I've done with this account over just the past couple months really is trade this account from $6,000 up to about 22K. So that's what I'm focusing on here. This is basically how I do it. So I have a couple different more than a couple different trades. So I basically alternate between more conservative trades like butterflies and spreads, and then I also have some long calls on, all right? And so your moments in time where you pick a long call are important because what you need to do is you need to select something that is really going to take off. And especially when I'm working on growing small accounts, I want to pick something that's cheaper. Okay. So, I mean, I'm not buying long calls on Amazon or Tesla or anything like that. I'm looking for these random tickers that have a specific setup that I want to trade. And our traders in our trading room came across two of these today. So, they are the more risky setups, but I mean, there's no way there's zero chance of, making growth and profits if the only thing you ever do is, stuff like spreads and stuff. So, what I like to do is I like to combine these long calls on these cheaper, more volatile plays and also do them with spreads and butterflies on some other tickers like Microsoft, stuff like that. So, anyways, this is about Halo. So, somebody came up with this one in the trading room. Basically, what I do when somebody comes up with a ticker that I haven't heard of is I do a Google search. I want to know what sector it's in. This is going to be in biotechnology. So just even knowing that, I know it's going to be volatile. I mean, do not be surprised if you buy it and it's up 4% and then it's down 10 the next day and then it's up 10 the day after that. That's what you are getting into. So do not even think of doing it if that's not the type of trading that you're not interested in. So basically, I looked at this and I like the pattern. So it's a little bit sloppy in parts. I mean, you can see it broke right here, but you see how it held the 50 period simple. You had a really nice squeeze. Boom, you made a new high, pulled right back to the 34 EMA. And we actually got into this before it was up 4%. But the reason why I like this is because it has high short interest and then it also has earnings. So what happens with these tickers, especially ones that are in these hot industries like biotechnology, is the short sellers, they get very, very worried prior to an earnings report. Here, I should make like a face like this. Ah! This is a short seller right here. They're like, oh, please don't let the earnings report be amazing. So then what happens is they start to get out of this and buy to cover before the earnings report. And when you're in a situation where you're trading at 28.35 and the previous high was 29.34, I mean, this is a really good potential for a short squeeze. We don't know if it's going to happen, but we know that there's high short interest. We know that the pattern is there. So the idea is, getting into it and then seeing if it can come through. So basically, I got into this one in the trading room. I like this also because it was so cheap. So when you're trading a small account, it's important to find tickers that have cheaper options. So these Delta 60s at the time were trading for $1.97. They moved up to about $2.30 just over the course of the rest of the session. And basically, I'm targeting this $30 price point, and then after that, 32. But I'm looking to stay in this trade until directly before earnings. So the earnings report is on the 10th, and that's going to be next Monday. So basically, I'm planning to stay in this and hold this and see if it can have a nice run into earnings. Now, the next one is Lake. So again, this is something that somebody asked me about in the trading room, and I saw the pattern, and it just looked like one of those wild, crazy names. And since I already took off Chewy and Peloton, I was in the mood for a couple more of those because I have a bunch of other more conservative trades on. It's very important that you have some aggressive trades, some conservative trades. And so, looking at this one right here, very similar pattern. I love how it had a gap up the previous quarter, runaway gap that never filled. That's very bullish. We have an earnings report coming up in September, which is a little bit later than what I really like to see, but it's okay. And then we have a previous high at 28, and as you can see, we're trading at 25. So looking at this right here, I mean, you can see that it's very, very close to breaking this previous high. This also has short interest. It has a slingshot squeeze. So I did go ahead and snatch up some of this one right before the close. Now, I hate buying something when it's up like 6%. So I just got one contract, just kind of like a fill position because I don't want to forget about this one. And if it pulls back, that'll be even better. And then I'll just buy more. So basically, I grabbed one of these in the September series because that's when the earnings series is. I paid $3.70 for it. I would like to have a couple more contracts. So if this thing is a little bit soft tomorrow, something like that, I'll pick some up because I think this is going to be a little bit longer dated trade into September, maybe, unless it just takes off immediately. Um, but basically, what I'm doing here is I'm targeting the 28 and then $30 price point, and I would have a stop down here below the $20 price point. So as you can see, your stop is a little bit wide. That's what's going to happen when you get into something when it's up 6%. But because these were my two new aggressive trades of the week, I decided to go ahead and go with it. So, beyond that, I hope you're having a fantastic start to your August. It's very gorgeous here in Texas. And if you want to know about the most recent upcoming webinar that we have, TG is going to be holding a webinar on August 5th. You can always go to the homepage of our website, simplertrading.com, and learn all about it. All right. So I hope you have a great rest of your evening, and I'll see you in the next one.